Hi, this is Jonathan with Horizon Payments, and today we're going to be talking about a very meaty subject. This is very important whether you work in the credit card processing industry or merchant services, or if you are a business owner and you want to understand what exactly all those fees are for credit card processing. So, brief overview, we're going to talk today about how the processing industry is organized, how processing works, different pricing structures, and then choosing the best option for your business. Payment industry organization. All right, so today I wanted to make this presentation a little more fun because I know there's going to be a lot to cover, and first we're going to start with terminology, but I just want to make sure that all of it is presented in an understandable way. First of all, so credit cards, where do they come from? Well, credit card companies, as you know, are also known as issuers or credit card issuers. These are generally financial institutions that provide you with credit cards and business credit cards. Now, usually they're a bank or a credit union, and if you're getting a store card, those are usually backed by a bank, although it may be not so clear exactly which one. Credit card networks. These are the networks that dictate where cards can be used and what the terms are. They're a link between merchants and credit card companies for authorizing processing transactions. So you probably know them better as Visa, MasterCard, Discover, American Express. What gets a little confusing, and we're not going to go into it today, is that Amex and Discover also issue their own cards. Where do credit cards go? Credit card processors. These are organizations that provide authorization and settlement services and support on behalf of a merchant, also known as a business. We'll be using those terms interchangeably in this presentation. They're generally backed by an acquiring bank that does the actual transferring of funds. Now, there's a slight nuance here, but we're not going to go too deep into it because it's not important for the basics. The acquiring bank is the bank that buys the merchant sales transactions and credits the amount to the merchant's account. So let's say you're in the processing industry, First Data, let's say you work for them, for example, or you have them as your merchant account. One of their largest backing banks is actually Wells Fargo. ISO, Independent Sales Organization. These are associates of the merchant processor that acquire and maintain merchants for the processor. Most merchants actually in the US work through an ISO. Okay, a brief aside about ISOs. You may be thinking because ISOs are middlemen between the processors and merchants that they may be more expensive than signing up directly with the processor. This actually is not the case necessarily in all situations, and in most they cost the same amount or even less than signing directly with a processor. So processors generally work on volume and outsource their sales to ISOs. They have small sales forces for when merchants contact them directly, but for the most part, ISOs are the ones who are acquiring new accounts for a processor. They can also add additional value for merchants and may even be more knowledgeable than a processor sales force. So if any of you have ever heard of the ISO Braintree, which is currently owned by PayPal, they were actually a ISO and provided a lot of value for the online processing industry. All right, so how do credit card transactions work? The transaction process. So it starts, as you know, with a customer with a credit card issued by a bank. We'll use that card at a business. The transaction is processed through a terminal or gateway if they're doing it online, and that transfers the transaction data to the business's processor. The processor then submits the data to the card network of the credit card. So that would be, Visa, MasterCard, Amex, or Discover. The card network sends the data to the issuing bank, and the issuing bank approves or declines the transaction based on the customer's available credit or funds and sends that information back to the processor. So that's the first step, right? They have to confirm that the transaction will be approved before they do anything else. Then the card network sends the approval or decline to the processor. If the transaction has been authorized, the issuing bank sends funds to the card network, which sends it to the merchant's bank. So essentially what's happening is the card issuing bank is the one who takes on the additional risk, for the most part, by sending money to the merchant's account and assuming that the customer will pay them back for that amount. Right? So that's how credit works. The merchant's processor's bank deposits funds into the merchant's account. This is called a settlement, usually within 24 to 48 hours. So that's just the basic process of how credit card transactions work. Things can get a little more complicated, but again, this is just an introduction, so we're only covering the basics. All right, next let's take a look at the fees and pricing structures for merchant accounts. Now, we're not going to be looking at the fees and pricing structures for credit cards for personal use. That's an entirely different subject. Right now, we're focused on the business side of things. Okay, so first we're going to talk about the most important fee, and probably one of the least understood fees in merchant bank statements, and that is interchange. Interchange are the fees for the credit card issuing banks set by Visa and MasterCard. And as some of you may know, interchange is the largest component of fees that merchants pay. That is, unless you are being ripped off by a processor. And unfortunately, what most merchants don't understand is that it is non-negotiable. Though there can be lower interchange rates for B2B businesses, for the most part, this is not something you can magically whisk away or talk to your processor about removing. All processors charge interchange fees, and anyone who says otherwise is lying or losing money because the processors themselves are charged by the issuing banks for these fees, and they pass them through to the merchants. So interchange generally consists of a flat fee and a percentage. How are interchange fees determined? Interchange rates depend on the card type, whether it's debit or credit, a rewards card, or a business card. There are also several other types. The processing method used, whether it's in-store, by phone, or online. The business type, whether it's B2B or business to consumer. The region, which different laws vary by different countries, so the interchange rates are not the same as they are in many parts of Europe, in the US. It also depends on the business type as well. So whether you have a retail business or a pizza delivery shop or an e-commerce business, you may have to pay a different rate based on that. So, for example, most debit cards have a rate of 0.05%. Now again, that's not 5%, that's 0.05%, and 21 to 24 cents per transaction. So a lot of times this is preferable for most businesses, so often they'll take debit but not credit cards. Other fees. Okay, so we also have the discount rate, which depending on who your processor is, they may define it differently. The way we define it is that it's the fee for each transaction charged by the processor. Some processors that bundle their interchange fees with their own processing fees together just call the rate the discount rate. Assessment. These are the fees that the card networks charge to cover their operating costs. So these are generally a fraction of a cent per transaction, and these are the fees that are charged by Visa or MasterCard or American Express or Discover. And they may not actually appear as separate charges on the monthly statement, so it's something you might want to look for or ask your processor about if you're curious. Then generally, most processors charge monthly fees. These include PCI non-compliance fees, various maintenance fees, and other monthly charges. If you're confused about the meaning of some of these charges, you'll probably want to contact your processor to find out what you're being charged for. And if it seems like it's not something that should be necessary, feel free to contact us and we can take a look at what the fee is to figure out whether it's a junk charge or not. All right, now we're going to take a look at the major pricing structures. They are tiered pricing, interchange plus, also known as cost plus pricing, and flat rate pricing. So first up, tiered pricing. Now, tiered pricing generally categorizes the card types into 3 or more different groups, also known as tiers. So if you see your statement and it says something like qualified cards, mid-qualified, or non-qualified, they will generally have different rates that they are charging you for each of those. Now, there could be more than 3 groupings, in which case some processors simply put the rate for those groupings of cards onto your statement. The rate for each card depends on which tiered grouping it is in. And as you may have guessed, qualified cards have the lowest rate, then mid-qualified, then non-qualified. Transaction fees are set by the processor, are fairly standard, and will likely also apply. Interchange fees will usually be included in the pricing tier. And so what all this does is that it simplifies your rates when you look at your statement, but the interchange cost of a card is generally unknown. And if this is a little confusing for you, next we're going to go into looking at an example of tiered pricing. So let's say you have a qualified rate of 2.3%, mid-qualified of 2.7%, and a non-qualified rate of 3.2%. For all mid-qualified cards, you, the merchant, pay the processor 2.7% of the volume of the transaction plus the transaction fee. So let's say now that you accept 2 cards in the qualified rate, one with an interchange rate of 1.7 and the other with a rate of 1.4%. Now I'm just making these up for the sake of an example. So, and let's say they're both in the qualified bucket. The processor will charge you 2.3% for both transactions, giving them a profit of 0.6% and 0.9% respectively. So when you do the math on this, the processor earns a higher margin for some cards, but you will never know because the interchange costs are not stated on the statement. That is, unless you go to look at Visa or MasterCard or Discover's different interchange rates and can figure out their complex tables out for yourself. But I don't actually recommend doing that. If you have to get that into the nitty-gritty, it's best to either contact a professional, or if you think you're being ripped off, then probably look into going with a different processor. So again, as I said, tiered pricing simplifies statements, but it usually makes them more expensive. So reps selling tiered pricing will often emphasize the simplicity and quote their lowest rates. What you should do as a merchant looking for a merchant account is to always ask whether all your cards will be charged at the quoted rate and whether the quoted rate includes interchange. Now, it's not common, but again, there are some scams out there where the rates do not actually include interchange when they're quoting them to you, and they do this to make additional money. Now we're going to take a look at interchange plus. So the cost of interchange for each transaction is broken down into its components. The processor also charges a small fee above the interchange cost. This is the plus part of the equation. So if your rate is 0.40% and you swipe cards with 1.7% and 1.4% interchange rates, then you will pay, can anyone guess it? Yes, 2.1% and 1.8% plus transaction fees. So that's the total cost to you, the merchant, for each of those transactions. Unlike with tiered pricing, the processor receives the same margin for each transaction. So that's that 0.4%. Beware of processors, though, who pad interchange rates by claiming they are higher than they are. So what has happened in the recent past is that as merchants have become more savvy about processing and what their rates are and understanding interchange, some merchant processors have taken to simply claiming that their interchange rates are higher than they actually are and listing that higher cost for interchange while claiming that their own rate is actually quite low. So a processor could claim that the interchange is something like 2.4% when it is actually 1.4%. Again, if you think you're having an issue like this gets a little complicated, and you should definitely consult a professional about it or consider switching to a new processor. All right, finally, flat rate pricing. So in flat rate pricing, processors charge the same percent for every transaction and possibly a transaction fee depending on who you go with. Cards not present may be charged a higher rate, and this is also because if the card isn't present, then the processor themselves has to pay a higher rate. So for example, Square, as many of you know, has become a popular choice in the recent past for merchant services. They charge 2.75% per transaction when you're using their card terminal, but 3.5% and 15 cents per transaction when the card number has to be keyed in, right? So if they don't have the card present and they're not swiping it or dipping it into a terminal, the rate is higher. So which pricing structure is the best? Well, the answer to that is that it really depends. And I know that's not the answer probably most of you were hoping for, but it's the state of affairs as they exist. Interchange Plus is generally cheaper than tiered pricing. As we saw in our examples, the merchant service provider will receive the same profit margin for each transaction if they're not padding interchange. Flat rate pricing, though, can be less expensive if you have low volume, low ticket sales with a lot of transactions. So for example, something like a coffee shop. Again, this is because something like, again, Square, they charge 2.75%, and that includes their interchange fees. So if you get stuck with a card that has something like a 2.5% interchange fee, Square will still charge you 2.75% regardless of what that interchange amount is. And finally, if you're not sure what pricing structure is best for you, check out some of our other videos or feel free to contact us. And there's that contact email, info@horizonpayments.com. And again, if you need immediate support, please click the link below to set an appointment. I'm John Simon with Horizon Payments, and I hope you found this presentation informative. Have a great day.